Welcome to another episode of Finsherpa videos. We are grateful for all the love and support that you have been pouring over the last few months. A few weeks ago, we received a query from one of you saying that you wanted to know more about the Bharat Bond ETF. So this episode is dedicated to that curious investor who wants to learn more about investment solutions. Bharat Bond ETF, or exchange traded fund as it is in its full form, was launched by the central government a couple of years ago. Now, the purpose of this bond is that the government put together some of the best public sector undertakings into a mutual fund. And this mutual fund thereby listed itself in the stock market, and investor could therefore subscribe to it. This is how it started. Since it started, there have been multiple series of Bharat Bonds that have come through, and probably I think 5 or 6 have already got listed in the stock market. But being exchange traded funds, they are listed like a share in the stock market. Any investor wanting to subscribe to it needs to go and buy it in the secondary market unless the government is coming up with a new series of Bharat Bond. The question to ask is, why should one invest in Bharat Bond? As I mentioned, Bharat Bond contains the basket that includes some of the best performing public sector undertakings in the country. These public sector undertakings are AAA rated as well. So what you are getting to invest into is a high grade safe investment option. Now that is very, very, very important. Second, because they are market traded and they are listed in the stock market, liquidity is instantaneous. You can go at any given point in time and sell your Bharat Bond at the prevailing price on that day. Third, the yields have been pretty attractive too. Because there is no intermediary and government through the PSUs come up and raise this money, the rates that have been offered is quite interesting. Most of these bonds have been raised in the yields of about 7.5% and 8%, which is very, very interesting for investors. Plus, the cost of this ETF is deliberately kept to a very, very low figure. Given that it's going to be a volume game, there's a very low cost. So the cost of investing into this is also very, very low. So Bharat Bond on the whole seems a very interesting idea. But who should be investing into this? If you're an investor who is looking at a 3 to 5 year horizon or beyond, then a Bharat Bond is for you. If you're an investor who already has a trading and a demat account, then you can invest into Bharat Bond ETF. If you do not have a trading account or a demat account, or you do not want to keep this in your demat account, you can choose to go for the fund of fund option that is available as part of a mutual fund. Some of the fund houses offer the Bharat Bond as a fund of funds, which means that they will collect funds from investors and eventually invest it into Bharat Bond ETF. So it's a kind of a feeder fund. Similarly, returns also will be fed back to the investor. So there is no loss on that account to the investor. So that's one option available for people who don't want to go through the stock market route but go through the mutual fund route. Now let's look at some of the advantages of Bharat Bond. The biggest advantage for me is the inherent safety of the basket. Like I mentioned, the basket contains some of the bluest blue chips in the PSU space. So the biggest of companies, the best of companies out there. These are companies that are doing really well, they are profitable, and they are AAA rated as well. So there is an inherent safety in this investment. Second, liquidity is kind of there for the asking, which means you may have want to invest this for a 5-year period, but let's say you have a short-term need, suddenly you need money. You can just go sell this in the stock market and realize it in no time. So there are huge advantages in terms of liquidity in this investment. Third, In terms of the realization or the return that one makes on this, like I mentioned, most of these bonds have been launched at a 7.5 to 8% coupon rate. Now, this can keep changing as long as your portfolio value keeps changing, but broadly, one should expect these kind of returns to come to you. What is even more interesting is that as we are now standing at a very, very high interest rate, my own personal opinion is that if one were to buy these bonds at these levels, then as interest rate starts kind of softening over the next year or so, these bonds will actually show a further capital appreciation. So what you count as a 7.5 or 8% return may actually be significantly higher starting from now over the next year or so. So if you are investing from now to the next, say, 18 months, these bonds could actually generate a much superior returns than they have in the past. So there are a variety of reasons one needs to look at. What is the taxation treatment for these bonds? If you are investing now, unfortunately there is no indexation benefit. So the gain that you make, the capital gain that you make on this when you redeem your investment will be added to your total income. So if you are a 30% income tax payer, you will pay 30% tax. If you're a 20%, you will pay 20%. Unfortunately, there is no indexation benefit for any debt investments that are being made at this point in time. So taxation is on par with any other taxation that you would find anywhere else. Is there a quantity limit? No. You can start with as much as a single unit as it's trading in the market, as compared to what you want to do in terms of size. So there is no size. Given that the Bharat Bond is a reasonably large kitty running into thousands of crores, there is never really an issue with liquidity. So you can always go buy in the secondary market at any given point in time, or you can exit from a secondary market at any given point in time. So if you're an investor who does not want to stay with the low cost fixed deposit that you get in banks, you're willing to move beyond that, but not to equity, which is high risk, then Bharat Bond is a place that you need to explore a little bit more. Hope this video was useful.